Gold prices soared on Friday, rising for the fifth straight session and on track to gain nearly 5% this week. The precious metal climbed above $2,680 per ounce as investors turned to safe haven assets amid rising geopolitical tensions. Earlier this week, Ukraine launched its second Western-supplied missile into Russia, while Kyiv's Air Force reported that Russia fired its first intercontinental ballistic missile at Ukraine on Thursday in retaliation. Meanwhile, Bitcoin advanced towards $100,000, supported by regulatory easing under President-elect Donald Trump. The cryptocurrency has surged over 40% since the US election this month. Let's get more on this now with Russ Mould in London. He's investment director at AJ Bell. Hello to you, Russ. Now, gold has been on a strong upward trajectory as the conflict between Russia and Ukraine escalates. What other factors are contributing to the rise in safe havens at the moment?
I think memories of the 1970s are very strong among investors. We still have wars in Eastern Europe and in the Middle East, both very important for oil supply. And investors are looking back to the 1970s when oil price shocks provoked 2 or 3 major waves of inflation. And gold was one of the best performing assets in the 1970s for investors. It provided some protection. Inflation is a further issue. It is proving sticky. It's not coming down to the 2% target as fast as many Western central banks would hope. And also you have the issue of federal deficits where the UK, the US, European Union are struggling with continued debt accumulation, and investors are worried that maybe central banks will take a chance with inflation to either inflate the debt away or, in the worst case, maybe even start printing money again. Certainly that's what some gold bugs think.
And how much further do you see gold and silver, which has also been rising recently, to continue rising?
I think if those trends, if all three of those issues continue, then gold could continue to advance. The one thing that may halt its rise is if interest rates stay higher for longer, because that increases the opportunity cost of holding the precious metals. You have to insure them, store them, and obviously you could simply make an easier return on your cash if interest rates stay higher.
Right. Meanwhile, Bitcoin is surging towards that $100,000 mark. Why is crypto gaining so much popularity?
Digital gold, I think, is one explanation for it. Again, it's seen as a safe haven asset in times of political and military conflict, possible inflation concerns, and again, deficit accumulation. So some investors may be looking for something that's perhaps a little bit beyond the governmental system. You also have this issue of the Trump trade with President-elect Trump in America. He's seen as being pro-crypto, pro-deregulation, and it's interesting to note that overnight, Gary Gensler, the head of the American regulator, the Securities and Exchange Commission, announced he would be stepping down early in January. He had done quite a lot to try and box in Bitcoin from a regulatory perspective. Now he's going. It'll be interesting to see who replaces him.
Now, markets are continuing to assess the Federal Reserve's monetary policy outlook after the US jobless claims unexpectedly fell. What are your expectations on the US Fed's potential rate cuts?
Yeah, I've just had a look now at the CME FedWatch service, which takes all of the hard work out of it. You can see there what markets are pricing in. And there's now only about a 56% chance of an interest rate cut on the 18th of December. And over the months, financial markets have reduced the number of interest rate cuts they expect for 2025. When we were speaking a couple of months ago, they were looking for a 3.5% Federal Reserve interest rate by next Christmas, by this time next year. They're now looking for 4%. So they've sort of priced out 2 interest rate cuts next year because the US economy is proving more resilient than expected and inflation that little bit higher.
All right, Russ Mould, investment director at AJ